Well, it is difficult for the smaller guys to compete, as you know, as we discussed earlier with the infrastructure lending. You know, the large banks are the ones that are able to compete on the infrastructure side because of the cost of funds, and that's what it ultimately comes back to. The four largest banks, for example, you know, they have a very large footprint across the country to gather deposits, and you know, the smaller banks just don't have that same level of infrastructure and network. So that's ultimately what it comes back to. So the large banks will always have that competitive advantage on the cost of funds, and it's going to be more difficult for the smaller banks. And in a situation where, you know, demand for loans is weaker, I think that, you know, that differential or that competitive advantage could be magnified. So it's going to continue to be a more difficult time for the smaller banks relative to the large ones.
Given that tough situation, do you think that there will be encouraged more to the merger and acquisition to win the competition, at least to survive?
I think that the regulator is in favor of consolidation in the industry. There are still, you know, perhaps in their view, far too many banks, and likewise in Fitch, we think that there are, you know, perhaps more banks than are needed in the sector. But you know, merger and acquisition activity is always difficult. I think, you know.
And do you think this is the best timing to do so?
I think on a valuation basis, perhaps it may be a better time than it has been because of the current sentiment in the economy. But I think, you know, from the acquirer's point of view, you know, they may be a bit jittery about you know, committing at this point in time. But you know, who knows? I mean, if an acquirer is taking a long-term view, it may be a good time for them to make an acquisition.